Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's trying to cure cancer, but their financials might need a little bit of life support. This is Oncotelic Therapeutics' latest filing, and it's a real roller coaster. Let's start by saying this filing is a post-effective amendment, meaning they're tweaking something that was already approved by the SEC. In this case, it's about reselling shares of their stock, which can get a bit complicated. Basically, this filing is about allowing some investors, Peak One Opportunity Fund, and Peak One Investments to sell their shares of Oncotelic on the open market. These shares come from a previous agreement. The company needs to register these shares so Peak One can sell them legally, and this could create some big waves in Oncotelic's stock price. This prospectus is about the resale of 33,863,445 shares of common stock. These shares can be sold by Peak One Opportunity Fund, LP, and Peak One Investments. This number of shares may be sold is approximately 6.8% of the total amount of company's stock. Oncotelic stock trades on the OTCQB market under the symbol OTLC. The other day the stock was worth about 5 cents per share. There's also a warning here that the company's accountants have some real concerns about whether Oncotelic can stay afloat. That's never good. One of the first things we are going to look at is risk factors. Risk factors are a company's way of laying all the cards on the table, saying, hey, these are the things that could really mess us up. One major concern is that their deal with Peak One, the investor we mentioned earlier, could seriously dilute the value of existing shareholders' stock. This means each share will be worth less because there are more shares out there. There is a risk the company can't get the full 10 million from Peak One. So the company might not get all the funding it expects, which would make it harder to fund its operations. Another risk is that they may struggle to grow. It is primarily in clinical development right now, but when and if it shifts to actually selling products, it may face a bunch of difficulties. Oncotelic says it needs substantial additional funding to keep going. This is not unusual for a biotech, but it is something we want to pay attention to. A big risk is if doctors and patients just don't buy into their new drugs, even if they get approved. It might mean they won't make any money. Now let's quickly go through the financial statements. I'm going to pull out some key figures to give you a snapshot of where they stand. Starting with the balance sheet, we see that cash is down from $170,000 $470,450 and accounts receivable is $1 to $1,876. Goodwill took a hit, dropping from almost $6 million to $2.8 million. If you do not already know what goodwill is, it is an accounting trick when a company is valued to be higher than its assets, for example, because of its brand value. So there's an investment in GMP Bio, $22.6 million. Total current liabilities are almost 20 million, which is up from 16 million in the previous year. They have an accumulated deficit that is over $38 million. Now let's take a look at their income statement, in which revenue went down from $70,000 to essentially zero. Oncotelic had a goodwill impairment of $3.2 million. The company incurred interest expense of almost $1 million. Oncotelic reported a negative $280,402 from the change in fair value of derivative on debt. That brings us to the loss per share to 0.001. There are some legal experts that are mentioned in the filing that get paid for their work but do not own any stock in the company. To the public, Oncotelic is run by a small group of directors that have various amounts of experience in different companies. As a non-accelerated filler and smaller reporting company, they get to skip some of the more detailed reporting requirements that bigger companies have to do. This can make it harder for investors to really dig into what's going on. To summarize, this is a fairly standard SEC filing for a small biotech company, but with a high degree of uncertainty about its financial future. Now, what's my take on all of this? Oncotelic is not in the best position right now. They're burning cash, and there's no guarantee they'll be able to find more. Also, a big part of the company relies on an AI joint venture that has no history. The recent history of high-profile AI company failures is a bit concerning. They themselves say it's a highly speculative investment, which is not what you want to see. There is a substantial amount of doubt about the company's ability to keep existing. Overall, I'd say approach Oncotelic with extreme caution, if at all. Thanks for watching Corporate Decoder. Please click the like button, subscribe, and let us know your thoughts in the comments. I'm really curious what you think of this report. Do you see any positives? Let me know.